Welcome everyone. Today we'll be discussing a sort of a swing trading method that incorporates everything that we've seen in the videos so far. Everything from the introduction video to the multi-time frame analysis video, and we're going to try and incorporate this into a kind of a trend following methodology and see if we can come up with some interesting trades. So what I would like to point out here is this is a swing trading methodology, and I'm going to take this example right here. So what happened here was we had a very distinct uptrend, and as you can see right here, the trend started to basically break down. So we had this final break here, which basically when the market started to make lower lows. So in this kind of situation, again, you want to see, in order to join the trend, you want to find a good place. You don't want to buy here at the low, thinking that the market's going to keep breaking down. What you want to do always when you enter a trend is wait for price to pull back. It always does. It always offers good entries. So your job as a trader is to wait it out. So the perfect entry would have been here. Now, of course, when you look at this, it all looks perfect, but at the time before this breakdown here took place, let's see if is there something that would have allowed us to get in and short right here. So for starters, we had this basically ironclad this zone right here. This was used as support multiple times. It was used here, here, and here. Very strong zone. You can draw a line basically right through it. You can see right here, a very strong zone. So again, this will be when you look for a breakout and then pullback, you want the pullback to push right into into the zone. So we have the first criteria met. Let's see on a lower time frame. This is actually a 1 hour chart. Let's see if we can look in here on the 1 hour and actually see what is going on here on the lower time frames. So we're going to look at the 5-minute chart. This is the 5-minute. Okay, and this is the pullback. And right here you can spot again the same pattern. Remember, fractal nature. So this is the resistance zone that we were talking about from the 1 hour chart. It's right here. You can see it very clearly. So again, one high here, we pull back again, and again, same pattern right here, crystal clear, very clean divergence. RSI making lower lows. Again, so the same thing we saw in the 1 minute time frame, 5 minute, we can apply it in a grander context. So again, this is a swing trade. We're trying to catch the continuation of the trend here. And again, perfect entry would have been right here. I actually did take this entry at the time. This was not just hindsight. I actually took this trade myself. Again, I entered right here and had my stop back here. And the idea was that I would just enter the trend, and I was targeting the prior again, the swing low. This is a swing trade. I actually was looking to exit right here, and actually the market eventually got there. So actually took a few hours. This was a longer trade. This is not like the 1 minute chart that we look at during the London US. This is a swing trading opportunity. So again, perfect entry right here. We had the lineup on the 1 hour with the previous this zone right here that was broken, and then the market pulled back, and again we had the beautiful divergence trade right here. Again, for some of you who are more conservative with your stops, let's say that you entered the market here, and once the market got down to here, you decided to place your stop here because you did not want to take a loss. And okay, so you wanted to play it safe. Market came back here, hit your stop loss, and it would have taken you out. Now let's see what happened here. Let's see if there was another opportunity here on the 1 minute chart. Second entry, and this right here is the 1 minute. This was the first. This is where I entered here, and if you would have been stopped out, you would have gotten another opportunity right here. You can see triple high right here, a very clean divergence, 3 consecutive lows. Again, we're back up, price swung back up here to this high. Again, very good zone, proven support resistance flip zone, even on the 1 hour. So we come back here, and again we get this big bearish engulfing candle, completely bigger. You can see the volume coming here. Actually looks a little crappy here on this charting, but in my my other platform actually looks a little bit better. But anyways, same story. We have three highs. You have triple divergence here off of previous resistance zone. Swing again, swing up previous swing high. Again, a perfect entry right here. Very small entry, very small stop. And again, this would have been the perfect entry for this. This was right here on the 5-minute chart. This is the 1 minute, what the 1 minute looked like. So again, we had either an entry here or an entry here for this large swing trade. And basically, as you can see, this was the low. This is actually where I exited. I did not stay for this whole move. I mean, it looks nice in hindsight, but there's no way you would have, that you would have known that you would have had a break like this. Once price gets down to here, it's you don't know what's going to happen. So that's where I exited. Very nice swing trade. This is about 45 pips. The risk was very small. As I said, my entry was right here on the 5-minute. Again, very perfect, perfect trade. You had a nice bearish engulfing bar. Very clean swing. It wasn't very choppy. It wasn't like this. You don't want to, this kind of chop you want to avoid. You want nice and clean swings. Again, very clean. We had the divergence. We had huge area here, a very important zone. You can see right here multiple hits all along. This was a proven zone. Again, we were with the trend. This was not a counter trend trade. You can see all the volume was here, huge move, and then we had this kind of very slow chop until we got up to here, and again the huge reaction. The reactions always occur in these zones. Always look for these important price flips. This was huge on the 1 hour. It's very obvious. You can clearly see it. So again, very nice swing trade. And again, this is the repeating theme of this method. That's what you're looking for. You can look for it on the 1 minute, the 5-minute. You can use this, incorporate this into a swing trading strategy. You don't have to take profits at the first, support resistance. If you can see a nice trend developing on the 1 hour, or the 30 minutes, you can utilize the lower time frames to help you get a, fine-tune an entry. Again, the market is a fractal in nature. What I showed you on the 1 minute, the 5 minute, you can see it right here, even on the 1 hour. I actually took this trade as well. It was a short one. Right here again, very clean divergence. You can clearly see it. One high, second high, third high. Clean divergence, spin bar. Again, back up to previous support resistance zone right here. One trade. This one again, same story on the 1 hour. One swing here, second swing here. Again, pin bar. You can clearly see the divergence right here. Very nice lower low on the relative strength. Again, another trade right here. As you can see, they happen all over the place. Could be a 1 hour, 30 minutes. It could be anything. So you can see the same patterns. That's how the market works. It's a fractal in nature. It's patterns within patterns. Now, if you want to go a little bit further, I'll give you another example. This was right here. This whole situation. If everyone who's interested in trading has read a book or two, and you will know that you have always been confronted, with the head and shoulders pattern. It's probably the most famous pattern. Everyone knows about it. And right here, a very clear example of head and shoulders. Here's your left shoulder. Market breaks out, comes back below the low, and now you're looking for a second shoulder to form. And it formed right here. One swing here, second swing, and you can clearly see the divergence right here. So again, you can incorporate this method into any. You can have patterns within patterns. Some of them are very obvious. This was one example. Again, you can incorporate what we've learned so far with these divergence patterns and trades, and you can plug that into other formations. This is a clear example of head and shoulders pattern. Again, very nice divergence. You can clearly see here left shoulder, right shoulder. Again, the issue with this pattern has always been that when there's a head and shoulders, you don't know that this is gonna. The problem always comes is, how do you know the shoulder is gonna hold and the market's gonna break down, and that it's not gonna break out and the trend is gonna continue? Well, here's one example. You can look for, again, you can look for divergence setups that will indicate that there's going to be a reversal here, and you're going to get the right shoulder, and this whole pattern is going to be completed. Again, so another tool in your trader's toolbox. It will give you some very nice entries. So again, you can use the head and shoulders, you can use this breakout and pullback method with the trend. So you can use all these tools to your advantage. So go open up your charts, look at the what happens on the 1 hour, the 30 minutes, the 5 minutes. See if you can spot these situations. You will be surprised at how often and how reliable they actually are. The only obstacle is that you have to actually wait for them to develop. So open up your charts if you have some free time on the weekend or whatnot, and just go back and start looking through these through the charts, and you will see that there's some very distinct structures in the market. Sometimes it is random, but sometimes it is very, very predictable. So again, take some time, look to the charts, see if you can spot these, and start training your eyes so you can actually spot these as they develop in real time. Again, that's the key, to spot these as they happen in real time, not after the fact. So I hope you enjoyed this video, and happy trading.